Thank you, Mr. Hickok. Our next witness is Ms. Hollis Huels. Ms. Huels is the Senior Vice President of Capital for Business in St. Louis, Missouri. Capital for Business is a national private investment firm focused on providing capital to middle-market businesses. Ms. Huels is testifying on behalf of the National Association of Small Business Investment Companies, the oldest organization of venture capitalists in the world. Welcome.
Madam Chair, Ranking Member, members of the committee, thank you so much for the opportunity to appear today and offer the National Association of Small Business Investment Companies' views on expanding small business access to capital. I'm a Senior Vice President and a partner with Capital for Business. We are a private equity fund headquartered in St. Louis, Missouri, have been an active investor through the SBIC program for almost 50 years. I'm also chair of our Board of Governors of NASBIC. We appreciate the committee's continued commitment to small business. We particularly appreciate the SBIC reforms that were included in the Recovery Act. Your actions have helped many of our small business partners. SBICs are private equity funds that invest exclusively in domestic small businesses. While the bigger names in private equity and venture capital invest globally, SBICs invest locally in Main Street businesses. Many of SBA's greatest success stories, Federal Express, Intel, Outback Steakhouse, Whole Foods, Apple, Quiznos, and many, many more received their early funding through the SBIC program. SBICs should be part of your approach to end the recession, grow the economy, and create jobs. The SBIC program has been a successful, market-driven collaboration, providing over $55 billion of financing to over 106,000 U.S. businesses. While these are large numbers, the program is currently underutilized. The program's design is simple and effective. Debenture SBIC fund managers raise private capital for investment in small business and are able to enhance these investments by borrowing periodically from the SBA. Currently, the SBIC debenture program has capacity to facilitate investments of about $4 billion a year in America's small business. However, currently only $1.5 billion are being utilized. Over the next 10 years, or over the next 4 years, this is an opportunity cost of approximately $10 billion. SBICs are needed now. Small business investment is in tight supply, but demand is strong. It is in times of economic stress that small business can be nimble and take advantage of growth opportunities, but they need access to capital. We recently polled our NASBIC members and found that 100% of the respondents reported that banks are pulling or reducing their senior lines of credit available. 75% of the respondents reported less subordinated debt available for small business. One of the most respected publications in the lower middle market, GF Data Resources, recently reported that, quote, "We are now in the throes of a dramatic slowdown in non-distressed private equity-sponsored buyout activity," unquote. While this year SBICs have invested in over 1,000 companies with an average investment of just over $1 million, the impact of SBICs is hindered by the relatively low number of licensees. Imagine what could be done if the program were running anywhere near full capacity. For seed and early stage companies, the situation is even worse. Early stage and equity investing for small business has largely dried up. A recent survey by the National Association of Seed and Venture Funds found that 90% of early-stage entrepreneurial companies, some of the nation's best job creators, are having serious difficulty raising follow-on capital. The SBA previously had an effective tool that was exceptionally successful at using the private market to steer equity investments into domestic small business with taxpayer money as an enhancement. While it lasted, this program invested over $13 billion in over 385,000 new jobs were created and hundreds of thousands of more were saved. While almost 70% of venture capital goes to high-tech and life science industries, this program invested in small business manufacturing. Unfortunately for America's small business, the demand for the SBIC capital is increasing at a time when the SBIC program is at its nadir. Last year, only 6 SBIC funds were licensed. This is down over 90% from the peak. Licensing in the 90s only took a few months, and in contrast, last year, many SBICs had to wait well over a year. The good news is that for fiscal year 09, the SBA has already licensed 9 SBICs, an increase of over 50% from the prior year. The SBA is openly trying to get licensing waiting periods down to 4 months. This is a great start. but we would be in a better place if 30 or 40 new funds were licensed each year. There is evidence of a dramatic uptick in the number of fund managers interested in becoming SBICs. The program should welcome more funds and investor and thereby providing a market-based solution to the current capital crunch. My written testimony details and explains the areas of improvement and reform, but I will briefly describe them. First, increase the number of SBICs. Keep the successful funds in the program. We need more SBICs in more places, particularly the West. Ensure the program that the SBICs that can raise private capital are not placed at a disadvantage, and implement the energy debenture. We also need to provide incentives for banks and others to invest in SBICs and create a stable equity option for early stage investment. In conclusion, the Recovery Act was projected to save or create 4 million jobs at nearly 197,000 per job. The small business jobs can be created for far less, close to $11,000 or $33,000 per job. If we take advantage of the SBIC program, we can have a real impact on small business. Thank you.